Come on, let's go. Yeah.
Well. Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are the entertainment-focused cryptocurrency channel where we take old, boring, and stale information and repackage it up in a fun and sexy way. You might be wondering, why did we come into the show with just me? Well, we do have David, but he's not in studio. But Rocco, do we got David over here somewhere? Have you found him?
Yes.
Oh, there he is.
Hey guys, how you doing?
Amazing.
Oh, you forgot about me, bro. What's going on?
A little twist.
Yeah, so I am checking in from my house, guys. I'm a little under the weather, so I don't want to get the guy sick. But I didn't want to miss a show, so I am here. And what an amazing show it's going to be today. We have a new president of Ethereum, as Donald Trump officially a Ethereum and crypto maxi. We're also going to talk about Coinbase, and they're launching a futures ETF on Coinbase. What does that mean? Also, we have a TradFi analyst who says once the ETF gets approved, Bitcoin is going to $180,000. We're going to go over that and much, much more. But first, a quick shout out to channel sponsor Cam's Blue Wire Technology. If you own a business and, well, you're looking to maximize your networking, your IT, and your cybersecurity, there is no better company to guide you through that than Cam's Blue Wire Technology. Visit bluewiretech.com or simply click the link in the description of this video. Robin, you miss me in studio?
No.
The answer is yes. Yes, you do. I know Rocco misses me for sure, yeah.
Yeah.
So guys, let's get right into it. You know, we got to start every show off with some fun stuff. Well, Rocco, you know what time it is. Pull up my lap. So we've shown a lot of these videos where people are punching this punching bag thing, and we've seen some epic fails. We've seen some epic accidental knockouts of one spouse. Well, here we have a new epic fail that we haven't seen yet, and well, let's see what this epic fail is.
It was a very nice miss.
Is that in his
That was
home?
Joe
Does
Biden
he-
when I first said it.
is that
That
a
is in
box?
his home.
Is that in his
Yes,
house?
yes.
That looks
Yeah, it looks like you know in your kitchen those vent things. Looks like he installed one up there. That's very funny. Also, Robin, we know there's shenanigans that happen in Vegas all the time. Well, this guy cracked the code on slot machines. A man has once been away from winning $1 billion trillion. He's going.
jeez.
Wow, 4 at a time? Okay. Wow.
You want to talk about degeneracy, guys? Or maybe are you just upping your odds, Rob? What are your thoughts?
I feel like this man is struggling financially. I just a thought. I don't think he's yeah.
God, okay. Vegas says, never a dull weekend with all the people visiting here. Also, we have President Joe Biden. So, you know, a lot of high profile people, they have others like social media correspondents or whatever that they hire to tweet for them or whatever. And well, apparently President Biden doesn't do his own tweets. And we know that because his press secretary is the one who tweeted this. Investing in America means investing in all of America. When I ran for president, I made a promise that I would leave no part of the country behind. And this was, of course, this is not Joe Biden. And this was deleted. And so that was kind of funny. Also, we have this. Sir, you were in a coma for 9 months. Oh boy, I can't wait to see how much my NFT collection is worth right now. Well, it's worth not a lot because NFT markets are completely eviscerated. And this one was kind of cool, a little turtle. I actually used to have a turtle, and I never tried brushing it, but that's kind of funny. But anyways, and then what else do we have? Oh, the bee hat. Robin, would you ever wear the bee hat?
What is that?
It's a bee hat.
Oh,
And
it's
he's
like
speaking in
live
Spanish.
bees.
That's why I got to mute it. Yes, like actual bees. You know, that's pretty unique, right? Everyone's always looking
Yeah.
for unique clothing, unique designer brands, unique, you know.
I feel like he
unique.
doesn't
I don't
have
think
many.
anyone else.
He can't have very many friends. Like I'll just
Mm.
yeah.
And then, Robin, would you ever dine here? How much would someone have to pay you to dine suspended over a waterfall on a park bench. Is there any amount of money?
Nah, man. I'm not good with heights, so I think I would pass on this one. So
Even if this beautiful young lady was
I don't even like being on a rooftop of a building with like the little ledge thing there, even if there is a rail. I'm the guy that's like by the elevator and everyone else is like on the patio having drinks, and I'm just like, what y'all doing over there?
I don't do heights either. I'm very terrified of heights.
Yeah.
And then we have, so Rob, you talked about this on ATB yesterday around the blockchain. And officially, Helium Mobile, they're excited to announce the launch of Helium Mobile's $5 unlimited plan. And so this is kind of their marketing video. I'm going to go ahead and play for you guys, and then we'll kind of talk about it. We'll kind of talk about what Rob said on yesterday's show.
What happened? Wasn't the future supposed to make it easier to connect and more affordable for us all? Well, it is now. Behold, Helium Mobile, using dynamic coverage, a network built by people like you, combined with the nation's largest 5G network. The result? Better access and affordability for everyone. Now the power of connectivity is in the hands of the people and their communities. We're building a new future, and that future is people power. That future is $5. High five.
So, Robin, I watched you on ATB yesterday, and your initial question was also mine: is $5 how? Right? Mind sharing your thoughts on this, and if it's something that you think could catch some traction?
Well, here's my assumption. I don't know. I don't know enough about the plans, the service itself, but I would think you're gonna still need a regular phone plan, because if it's through T-Mobile, you're still gonna need the T-Mobile plan, right? No, that was my thinking. So let's just say you still have a normal bill, but however, you can use the app. So I'm just kind of speculating here. So if I'm way off, I don't know, but perhaps it works similar to like WhatsApp. So you can use WhatsApp to do video calls, to do text, to do regular calls, and that's a free service. Perhaps this is something comparable where it's the app. You use the app, it's $5, and you get unlimited text. I don't know. I don't know the details of it. I'm assuming because mathematically, without the T-Mobile service, it has to be they can't be priced that way, right? It can't be priced $5, and then you have to go out and create all of the towers and all of this mess, and just.
I do have some context here. So it says that it's available only in Miami. They're launching in a single city to continue to scale unique coverage model that combines our partners' nationwide 5G network, which would be T-Mobile, and the Helium mobile network. And then on the bottom here, I believe as well, it's something they call dynamic coverage. It combines the power of people-built Helium mobile network with the nation's largest 5G network. So essentially, they're calling it dynamic coverage. They're combining the Helium network with T-Mobile's 5G network. This is out of my area of expertise, but obviously, if you're telling me I can get T-Mobile coverage, which I have now for $5, right?
Well, if you know anything about T-Mobile, they got a spotty coverage, or at least here in Las Vegas. So remember when I had T-Mobile, every time I went to my dad's house, it wouldn't work. And so perhaps it fills in the gaps or the voids, and anytime there's a degradation of service, whether it's Wi-Fi or text or calls, perhaps it kind of fills in and picks up data from Helium network if it's around or available. So I don't know. I think that this has got a lot of potential. I do think that if you have a mesh network of different, because I don't like the Helium network miner idea as much as I do running a node on your phone and then helping spread a network that way, right? Because everybody has a phone in their pocket, and then if you're inside of a city, you're driving around, it kind of makes sense to share your network with everyone else around you that's participating via your phone versus having to run a miner at home. I think it's a little bit more practical, and I could see that being a better business model. Now, whether or not they capitalize on that, or if this is just a side gimmick, or this is just another facet of their another facet of their business model. Like here's a good example, like Netflix, for example. When Netflix first launched, it was mailing DVDs to your house. I remember when I first signed up for Netflix, that's how it was. You got a little envelope, you got 3 movies, and then when you're done, you returned them. And about a couple years afterwards, they offered streaming, and their streaming category was absolutely atrocious. You only had like the worst movies on there. And so they did it more like, hey, if you're waiting for a movie, you can stream some stuff. And then later on, that business model completely shifted. And they're not even, can you even get a movie through the mail anymore through them? I don't think so. But
No.
obviously, their business model has changed, and it wasn't their original business model. So we could see something very similar. Maybe Helium decides to, makes a name for themselves by offering these Helium miners, and then all of a sudden they are offering node services on their cell phones and spreading the network that way. And maybe they're like, you know what? We don't need that hardware version. Let's just run this thing on the phones, and then we can spread the network that way. So I think that could be something that has promise.
So, Robin, there is a token involved in this as well. So, Rocco, going back to this blog post here, why are people even interested in contributing to build an alternative decentralized network? In part because they share the vision of affordable and accessible connectivity, but also because by helping build and being part of the network, they can earn rewards called mobile tokens. So,
Mobile?
there you have it. Mobile tokens, yeah.
So there's an additional token to this?
Yeah, that's what I said. And what does that mean for Helium's token, HNT? Does it take away from that? I don't know. But
Yeah.
you're telling me I can get the same coverage. So because I have T-Mobile, right? And yeah, you're right. They're not the best. But I have T-Mobile. And you're telling me I can have the same coverage I have right now for $5 a month. Why wouldn't I do it? But again, this is only available in Miami. They're using that as the first city to really test this out and work out any kinks, and then hopefully expand by then. But yeah, I don't got much else to add to it, but very intriguing. Okay, so let's get into our market segment. But before we do, today's market segment is brought to you by channel sponsor I Trust Capital. There is one company that I trust when I'm looking to hodl my cryptocurrency and enjoy my gains tax-free in retirement. That is I Trust Capital, the leading company in our space. If you set up your account with our link, you will receive a free $100 once you fund your account. I do have some exciting news that got emailed to us today from I Trust Capital. There are 5 new cryptos that you can invest in long-term in I Trust. Those include Hedera Hashgraph, Quant, Jimmy, pay attention, Gala, Chili's, and Flow. And so they are currently, I Trust is currently adding more tokens as they go. We know they recently added XRP after the summary judgment was brought down. And so, guys, another option for you. If you want to enjoy some tax-free gains for retirement, go ahead and set up an account if that's what you want to do. So, with that being said, Robin, what are the markets looking like? I know Bitcoin dropped under 29K for a very brief moment, and I believe the last time I checked, it was a little over.
Yeah, I've been watching this since the start of the show, and you have a big move right when we were setting up here, all the way down to 28.9. I was a little surprised we didn't see some kind of cascading liquidations, a bigger drop. Obviously, there was enough buy pressure underneath 29,000. Some orders got filled, and back above as well. So, I don't know. I think that's curious. We went down and tested it. I would be a little bit more concerned if we go back down and test underneath 29,000 and test that support level 2 or 3 more times, because as you keep testing support or resistance over and over again, the more the likelihood of it breaking and staying below or above, but in this case below. So you can see that the general trend over the last week has been that we are selling off and dropping. Not by much. This graph might seem a little bit more dramatic than it is, because here a week ago we were at 29.5. Obviously 29.1, not that far away from where we were at the beginning of the week, but the trend is in the downward movement right now. On the 1 month, you can see It's still just been right at this 29,000 mark. And I know we're closing in on 2 months now. It'll be 2 months within 5 days. And I know we've discussed this many times. We do trade in these price ranges, these channels, for typically 2 to 3 months. You have a 2-month channel here, 2-month channel here, 3-month channel here, 3-month channel here. So I would expect a similar move, another move within the next 30 days, a big breakout. And if the trend continues, we should get higher local highs here. So 34,000, perhaps 33,000, I think could be something to take a look at if you're just to look at the previous price movement on the moving up. Now, taking a look at some of the biggest gainers as well. You got this one. I don't know what this is. The SIA.
It was just listed on Coinbase.
Is that what it is?
One.
Coinbase effect. Thorchain still flat for today, but still up 46% on the week. And then Rocket Pool up 2%. But we got a little bit more red in the markets today than green. There's a couple exceptions on that side. But Terra Luna Classic, which don't know why that's still around, but GMX down to 12%.
Top 100.
Yeah, Uniswap, Compound, Conflux. So Compound's hasn't been doing too hot this week, man. Down 11%.
Compound is down big.
Yeah.
Click
A
on
lot
Compound.
of DeFi.
What was the all-time high? What was the all-time high for Compound?
All-time high on Compound. I think it might have been like $600 or something.
300-400. I was going to say 300-400.
Yeah, it was $770. I think it peaked at 800, but basically $700 is the top. It realistically through the bull market traded between $300 and $500 basically, and then now $50.
Is this something you would consider picking up, seeing as far from all-time high it is, and the potential of?
My thing is if I'm going to go DeFi, I basically I'm trying to see what's the biggest risk versus reward. Compound's coming in at number 89 on the coin market cap list with a market cap of $383 billion or $1 million, excuse me.
Million.
Yeah. So 383 million. But then I just look at Aave. Aave is not that far off. Now, it is at number 44 in the coin market cap, but I think you're at just shy of 900,000, or 900 million. So for me, I feel like Aave is way safer of a bet, and it's not dramatically, it's not leaps and bounds ahead of Compound. It is a good solid 2x.
3x.
That's a 2x, 2.5x, I guess. But I don't know. Is that return worth it? I think Aave is. You agree, right? Aave is a safer bet than Compound, right?
I would, yeah. If I had to pick, I'd prefer, and this is just me personally, I'd prefer to hold a little bit of both. But
yeah, I mean,
but if I had to pick one,
diversifying
I'm
diversifying. But if I just had to go one or the other, I'd lean Aave.
I want to know what the chat thinks, guys. Would you pick Aave or Compound if you're looking to get exposure to DeFi? Put a 1 for Aave, put a 2 for Compound. I'm curious to know what you guys think. But for me, it's Aave. The launch of their stablecoin, and just they got more pairs on there. Compound's been around a little longer, but I think Aave's definitely got more potential. I believe if taking a look at tokenomics here, I believe Aave does have a smaller supply and more of it is already circulating. And I'll just reference that really quick here. I don't want to give any false information out. But so as far as Aave, we have a total of 16 million tokens with 14.5 million already circulating, which puts us at 90.75 ratio for Compound. So on CoinRank, Compound is outside the top 100. So for Compound, we only have 68%, right? So, but it's Compound? Yeah, DeFi. Damn. Okay. So only 10 million tokens and 6.8 million are circulating. So higher inflation rate, but less tokens. 10 million versus 16 million total. But Aave's more of that is already circulating, which if you're taking a look at from an investment standpoint and what is going to allow price to surge, you want to look at inflation rate, because as demand comes in, inflation is going to quell the price action that demand would cause. And so if the majority of the tokens are already circulating, once that demand rises and supply essentially stays the same, or maybe goes up 0.5% or 1% a year as an inflation rate, it's going to have a larger impact on price than something that's got a 3, 4, 5% inflation rate. I mean, it's just common sense. And then also, just real quick, going back to Bitcoin, I did have a Bitcoin chart I want to show. Guys, look at this monthly candle. I mean, I'm just looking, and I don't see a monthly candle smaller in wicks, smaller in body. I mean, this is like a classic doji candle on the monthly. And so what did Doji say? Doji say there's indecision in the market. The bulls push the price up from 29 to 30K, get completely rejected. The bears push it under 29K. The bulls push it back over 29K. So there's a lot of indecision in the market right now. Does it have more to do with macro, Robin, do you think? Or does that have more to do with maybe regulatory, people don't know what Gary Gensler is going to do, or there's too much uncertainty in the crypto side? Or do you think it's more macro governments?
It's a lack of volume. And the reason I say that it's a lack of volume is that, well, I think that nobody's disputing Bitcoin's worth, right? And I think at 29,000, 30,000, I think anybody that's crypto savvy understands that's a good deal, right? It's not overbought. I don't think that it's gonna dramatically drop from here. Now, anything's on the table. Could it dump down back to 18,000? Sure. But even if it did dump down to 18,000, how long would it stay there? And would you be kicking yourself in the butt for buying it at 29,000? Probably not. I mean, I'm sure you'll look at it like, could have bought it at 18. So the lack of volume isn't pushing it up, right? It isn't pushing the price up. The lack of volume, there's not enough money just pouring in to buy Bitcoin. And a lot of it is because of the hesitation of institutions. And so all you have is just retail investors. So you see little movements from both people just buying and then also people trading. But at the end of the day, you're not going to see the price dump too dramatically because people see the value in crypto. But yet there's not enough retail in here to take an asset that's almost $1 billion or almost a $1 trillion or $500 billion. I don't see enough money coming in from retail sector to take this 500 billion and bring it up to 800 or 900 or 1 trillion. And so for that reason, not enough money flowing in, and people see the value on the other side. And so that's why we get in these little consolidation periods. But as we've talked at nauseum, we will see the Bitcoin ETF open up the doors for the investing public, the traditional investors, Wall Street, and institutions that don't forget the spot Bitcoin ETF is not for the average trader. I mean, it can be, but it's more exposure for companies. Remember, a lot of the wealth that is locked up here in the States and even internationally, a lot of it is locked up through companies in the stock market and in investments. And when we see the money printer go, when the money printer is out of control here in the States and we're just going quantitative easing, that money is directly funneled into companies. And the companies a lot of times just can't expand fast enough. They have a ton of capital, and what they do is they buy hard assets, they buy they buy treasury bond, they buy a host of things. And one thing that they could expose themselves to in a similar way that they do with gold and oil and other commodities is Bitcoin. And that would be the large surplus of money that we're talking about. That's what's going to push the market up. It's not because your dad or your uncle can now buy Bitcoin off of the stock exchange. It's way more broad than that scenario.
I agree, but you're also opening the door to these people who have traditional IRA or 401k accounts that are now have access to these ETFs and essentially direct exposure to Bitcoin. So I think it's going to be a multitude of things that bring that liquidity and volume back into Bitcoin. And speaking of ETFs, we do have this video that was shared by Michael Saylor. So this gentleman's name is Tom Lee. He's an analyst on CNBC. And Rocco, if you want to pull up my laptop, we have the video here we're going to play for you guys. Listen to his price target of what he thinks Bitcoin will get to once this ETF gets approved. Let us know your thoughts as you're watching this video.
I always like hearing your price targets because you are so fearless. Where are you on Bitcoin by the end of next year, let's say?
Well, if the spot Bitcoin gets approved,
Yeah.
I think the demand will be greater than the daily supply of Bitcoin. And so the clearing price, this is done by Sean Farrell, who's our crypto digital strategist, is over 150,000. It could even be like 180,000.
But that's only if the spot, only if the ETF gets approved.
Yeah, and the US,
a
spot US, because
right.
a spot Bitcoin ETF is approved outside
right.
the US.
Okay. But if it's not approved, then are we just lingering around 29,000?
There's still upside counts because of the halvening next year. So you'll have a drop in supply again. So the clearing price has to increase, but it won't be six figures.
What do you think, Rob? Do you agree with that price range, 150 to 160?
It's gonna get there. It just depends on when. I think that 100K is easily crossed after the spot Bitcoin ETF passes. We're rolling into post-halving, and also maybe we turn a corner on this recessionary period. I think all the other Bitcoin cycles after the halving have also coincided with big movements of the macroeconomics. We saw that in the 2021 rally with Bitcoin. That also happened to be the most the most printed money that we've had, the biggest growth cycle we've had in our economy. They're just handing out. People didn't know what to do with money. They're literally just sending people that were rich or didn't need cash. They're just sending them checks like in the mail. Well, you didn't even have to ask for it. You could be 18 years old working at McDonald's, and all of a sudden you're like, oh man, I just got $1,800. That's cool. I'm not. So these situations just happen to just all line up. And what I'm seeing is that these situations are all lining up again. As I mentioned, spot Bitcoin ETF. You have the halving. You have, right now we're in a recessionary period with the banking situation being a little iffy. And could we see a situation where something breaks with the banks and the feds are forced to print their way out of it? I think that's quite likely, honestly. And if it's not the banks,
say that's probable.
If it's not the banks, it's something else, right? Something could break. We saw in the past where, hey, there's no way that home mortgages can take the market because nobody would ever sell their home because they have to live in it. And we saw what happened in 2008. And so something in the market, it just by default will break. And the federal government can either say, hey, we're just going to let this bleed through and get a reset, or we can try to save the market, and politicians can come up and say, people are hurting, people are losing their money. And I think that is just a foregone conclusion, right? We saw what happened with
an election year, Rob.
We saw what happened with Silicon Valley Bank. Politicians could have said, hey, these are risk on tech industries that borrowed lots of money. And, well, hey, bad practices from the bank. Now, you can also say that they took on risk by leveraging treasuries, short-term treasuries, or long-term treasuries as well. But did they let that go under? Did they let a hard reset in that venture capital space? No. They came in and stepped in and printed money. And so I have zero doubt that would happen again in any kind of dramatic financial situation. And it's not a question of if something else breaks, but when. And I think that as things tend to line up, Wouldn't be surprised if all of this meets at the same general time. Having ETF, financial situation, the cutting of interest rates, the printing of money, the turning on of financial of quantitative easing, and the injection of capital into the markets as well.
So, Rob, we know those events have caused a positive reaction to crypto assets and risk on assets, right? But what if something negative happens, right? What if the halving comes, the spot ETF's approved, but now we have unemployment at 5%. We have a commercial real estate crisis, something that doesn't coincide with positive action, positive price action for risk on assets. Maybe it even means these bonds and notes, they go up to 5.5%, 6.5% because the U.S. is downgraded. And so now more people are incentivized to buy U.S. debt and earn 6.5%.
As markets get stressed, as you get into this financial uncertainty, the few tools that the federal government has is to cut interest rates and print. And so in all of the scenarios you said, that's going to be the answer. And so that's what's going to happen. If you have a housing issue, you have whatever financial issues that you have here, yes, it could be bad for risk on assets. Like when the housing market crashed, everything crashed. There wasn't any commodities that did well, right? Like when 2008 came, everything tanked. And so if we had a situation dramatically where the financial markets started to collapse, we saw it in COVID, everything's going to collapse. It's going to be bad for Bitcoin. However, the first thing to pop back up after they cut rates, after they keep printing, after money is injected into the system, is that it pours into commodities and it pours into risk on stocks, because all of a sudden you go from broke and broke in to all of a sudden having a ton of capital you don't know what to do with. And the smartest people in the room are going to identify that, hey, certain assets and certain groups are going to outperform the rest of the markets. And it's those moments where millionaires and billionaires and the smartest companies rise to the top. And that's what we're all waiting for. And so the one thing that you don't want, to answer your question, David, like what could happen that could subdue a Bitcoin rally? What could tamper the bull market? It's exactly the opposite. It would be to have very low sustained growth over the next year and a half, 2 years. If we go into the halving and you get and all of a sudden the interest rates are still at 5% for the federal government, if the home mortgage average 30-year home mortgage is at 7%, which it's currently playing and flirting with, if that's still there and people are still barely getting by paying their student loans that just came back, and there's just not a ton of capital into the markets, if they can just keep everybody barely alive, slightly broke, just barely getting by, that's the worst case scenario. And so the best case scenario is doom and gloom, fire, brimstone. That's what causes the politicians to act out and be like, we'll save the day, we'll print money. And then that right there is what kicks off the next bull market. So, and it's just not, it's not a question of if, but it's when. Will it coincide with the halving? I think it will. That's my opinion. I think these things are lining up. Very interesting.
You made some really good points, and I think you hit the nail on the head in, and this is speaking selfishly, of course, because we all want our portfolios to gain value. But if it is mass destruction and unemployment's high and there's chaos in the markets, yeah, the government will step in. And what happened last time the government stepped in? Bitcoin went from $3,000 to $69,000. I think you hit the nail on the head. It's something I don't think a lot of people think about. They think, okay, well, if it calms down and there's no crazy things happening in macro, then I do agree with you. I agree with almost everything you said. If it's a slow move down the inflation, if unemployment stays the same, if the commercial real estate sector doesn't start collapsing, if the interest rates start slowly coming down and no one has to interfere, I agree. I do think this price action we're seeing gets drawn out more versus there's complete chaos. You're here, the likes of Elizabeth Warren and Maxine Waters, especially being an election year next year, the incumbent president does not want to go into debates with the economy in shambles. They want to go into debates with people saying, yay, I got a $2,000 check from my government. Yay, we love Joe Biden. Yay, thank you. And what does that translate to? That translates to, at least historically speaking, the price of crypto and Bitcoin going up. All right, Rob, why don't you give some love to the chat?
All right, we got 150 people watching and not too many likes here. 80 likes, well, over 50%. So I'll take it. I'll take it. But we would like to see over 100 likes. So do us a favor, hit the like button. And then we do have a couple new people, not too many, but Anxiety, Cryptopreneur, and Luke. So to all of you, hola! Welcome to Sin City Crypto. So.
Speaking of anxiety, Rocco, pull up my laptop. We have a new president of Ethereum, and that is a new whale in Donald J. Trump. He is an Ethereum whale, stashing up to $5 million in ETH, shows a new report. Former President Donald Trump is apparently an Ethereum whale, as he is now reported to earn up to $5 million worth of Ethereum in a wallet. The disclosures also indicated that Trump earned $2.8 million from his ETH holdings. Overall, his involvement in crypto-related ventures has resulted in a net profit of around $7.6 million for Trump. And guys, if you remember, he tweeted this back in 2019, July 11, 2019. I'm not a fan of Bitcoin and other cryptocurrencies, which are not money, and whose value is highly volatile and based on thin air, fiat. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity. And this was, of course, the main narrative from the traditional people, traditional finance and politicians back just a few short years ago. And now this man is literally an Ethereum whale. Robin, Donald Trump bullish on crypto?
I mean, the man's a businessman, and well, he realized that he can make a lot of money on NFTs. Probably the only person making money on NFTs lately. And I'm just curious if he. Here's the thing: 2019, that was a long time ago, right? It's 4 years ago.
Very long time.
And especially in the crypto world, 4 years, like, good Lord, that's you have a lot of different perceptions on Bitcoin and crypto over that lifespan. So could he have come around to it? I think so. I mean, I'm sure that,
Let me ask you this question, Robin.
that Donald Trump, okay, here's the thing. Like, Donald Trump also owns a lot of real estate, right? Now, does he own apartment buildings and complexes and homes and residential offices that he would particularly sleep in? Would he live in one of his apartment buildings? Some of his apartment buildings? No. So for the simple fact that
but that's a bad argument. I'll tell you why. Because he wholeheartedly believes in real estate as an investment. He doesn't wholeheartedly believe in cryptocurrency as an investment, which is intriguing to me. That $5 million, he has not cashed it out for USD. It still remains in Ether in a wallet. So, you know what I'm saying? Like, why not take that $5 million in Ether, take it to an exchange like Coinbase and cash it out for US dollars? You're holding it in Ethereum still.
Perhaps there's more to it than that. Maybe he's trying to keep it liquid for whatever reason. Maybe he's trying to stake it. Obviously, I don't think so, but I don't know. I mean, maybe he's generated that Ethereum and he's keeping it there. I don't think. Here's the thing. He is in a different position as a businessman and entrepreneur that he doesn't need to offer a product, take the profits from it and take it right away, right? Even if it is Ethereum. He doesn't need to say, oh, hey, we made 5 million Ethereum, cash it out. I need it in the bank. I need to pay bills. Like, he's in a different position. And so, does he have Ethereum? Obviously. Does he need to cash it out? Do you think he needs to cash it out financially, David? Question.
No, but why wouldn't he, Robin? If he still doesn't believe in crypto, why would he keep $5 million?
Okay, well, it could also be that he has to pay capital gains the second he sells it. There's tax implications. Okay. There's It's not as cut and simple as, hey, I sold an NFT. Let me just take my 0.2 ETH profit off. Like, it's a lot more complex than this. I mean, the dude's got millions of dollars worth of Ethereum. He has a company that helped launch the NFT. There's all kinds of tax implications. Dude's getting sued left and right and getting prosecuted. He had to go in and turn himself in this morning. I just think that it's not as simple as, hey, you got Ethereum, he must be bullish. Why didn't he sell? He must be bullish. I think there's a lot more factors that go into that, especially when you have a multi-billion-dollar company with your brand or name tagged to it.
I think Redman hit the nail on the head. He said he's waiting to trade on futures 125x leverage. I can buy that. All jokes aside, though, you made a good point with the tax thing. We know if you wait till at least after 1 year, your capital gains tax drops significantly. I believe it drops from about, depending on your tax bracket, let's just say you're at the higher end, 38, 39%, all the way down to about 15%. And so you're saving a lot of money there. So that idea, I can't subscribe. But it's just very intriguing. Someone who is seen as anti-crypto is holding $5 million worth of Ethereum, not even Bitcoin, but Ethereum. It's just very intriguing. Let's move on from Donald Trump to Ledger, as they are partnering with PayPal. We know PayPal just came out. They revamped or re-upped, doubled down on cryptocurrency. They launched their PYUSD, which is a stable coin available on PayPal. They also are doing a crypto hub where you can buy, sell, send, receive, and convert cryptocurrencies directly from the PayPal app. And now they are partnering with Ledger, the leading hardware wallet in our space. Ledger has announced its integration with global payment giant PayPal. This collaboration aims to provide users with seamless and secure platform to explore the world of digital currencies. The integration allows U.S. users to directly purchase crypto such as Bitcoin, ETH, Bitcoin Cash, and Litecoin using their linked PayPal accounts via their Ledger Live companion. Those who have previously bought crypto with PayPal can now purchase in Ledger Live without additional verification, and the acquired assets automatically transferred to the user's Ledger wallet. So if you buy it on PayPal and you have a Ledger connected, it automatically take it off PayPal into your hardware wallet. That's very intriguing. To utilize this features, users can simply open the Ledger Live app, navigate to the buy section, select their desired crypto, specify their country, and choose PayPal as your payment method. The digital assets will be securely sent to the user's Ledger device after a successful transaction on the PayPal interface. Rob, I talk about this all the time on our show, right? The pain points of getting into crypto and self-custody. Is PayPal and Ledger, are they working towards that? Are they working towards making it more practical and easier for the everyday user to be able to do things like custody your own crypto, custody your own coin?
I don't think this is all that special, to be honest with you. I mean, and why do I say that is because, they're touting the fact that you can get assets deposited straight to your ledger. Remember, your ledger is just an additional layer of security for your wallet address, right? Where your seed phrase. But the wallet address is still that. So if you think about it this way, if you have a Bitcoin wallet and you have that wallet on the ledger, at any point in time, anybody can send you Bitcoin and it goes straight to your wallet, right? And it's just how you access those funds is where you get that layer of security. So to receive...
Yeah, but it just sounds like you're minimizing the importance of self-custody. That's literally what it sounds like. You're over here saying that, just because you put it on a ledger, it's not a big deal. It's more than that. Your private keys are held offline. You can't essentially get hacked.
I'm not at all putting any slight towards a hardware wallet. Hardware wallet is ideal. But what I'm saying is that I think the expectations of sending crypto directly to a hardware wallet, I think that's just a foregone conclusion, right? It would be like us reading an article and be like, Coinbase is partnered with MetaMask. You can now send your assets straight from Coinbase to MetaMask. Like, duh. Like, okay, sure. Why not? Like, the same thing here. If you have PayPal, can now send assets directly to your wallet address that's on your ledger. That's what I'm saying.
It eliminates a potential point of failure. It eliminates a potential point of sending it to the wrong chain. If you're trying to send Polygon, and I know Polygon's not available on PayPal, it will be soon, I'm assuming. But if you're trying to send Polygon and not knowing, you're not sending the ERC version, but you're sending the actual Polygon base layer version, and it gets lost. This takes that pain point away.
I understand that you can do draconian transfers and that you could go and do 8 different steps, and you can do it the old school way, and you can write down seed phrases on a piece of paper. What I'm saying is that this is like 5 years ago, right? And the fact that a company can send assets to a wallet address that's on a USB stick is not revolutionary. And I'm not trying to discount at all the partnership. I'm not trying to discount, but I'm just saying it's not that. If you're all of a sudden going to go YOLO to buy a ledger because of this news, you've missed out on all the other news that's come out, all the other reasons. This is not anything that's brand new. I think that PayPal is offering a service that is, in my opinion, very safe because of the size of the company. They're not going to rug pull you. Is there some potential for risk? Sure. How minute is it? Pretty damn small, I would assume. So I would feel pretty comfortable transacting on PayPal. And my ideal way of storage is with a ledger, with a hardware wallet. And if I can remove all the points of failure and have my deposits and withdrawals go strictly in between the two with very little friction, it's ideal. But what I'm saying is that this is not a big deal. This should be how things work. It is natural. It's like, it's not a game changer. This is all I'm saying. We're past that. We're past that. We're not in this 2012 era where you're writing down passphrases and burning tokens. I'm just saying this is standard protocol here. That's all I'm getting at.
Bearish on PayPal. Okay. So let's take a look at it. We have some more news from PayPal. This is PayPal in the UK. As PayPal to halt crypto sales in the UK from October 1st. Rocco, if you want to pull up my laptop, I got the article here. PayPal said its users in the United Kingdom will temporarily lose the ability to buy crypto via its platform starting October 1st. The Financial Conduct Authority, which is known as the FCA, has recently announced new rules that make it mandatory for crypto companies to institute, quote, clear risk warnings, as well as a 24-hour cooling off period before they enable customers to put their money in crypto assets. That is the dumbest thing, a 24-hour cooling off period. Okay. According to PayPal, it is, quote, deeply committed to complying with the said regulations and will, therefore, suspend crypto sales in the UK for as long as it takes to make the required changes. And they told customers in a message today that that it was only that they will be re-enabled in early 2024. Now, Rob, I want to ask you a more directed question on this one. Is it good to have, because we know crypto companies have gone through this mess of regulation here, and this country's different, and we got to change the way we operate here. Is it nice to have a fintech giant, the fintech giant in PayPal, who is now, I would arguably say, with the moves they're making, really dived into our space, for them to go through the same pain points these cryptocurrency companies have gone through? And is that going to help adoption in the long term because of their relationship with regulators? They are already, regulated and operating as a fintech and payments company in these countries. Does that give us a little more of an edge in dealing with regulators now that we have PayPal on our side?
I don't see much changing on the regulatory landscape just for the simple fact that PayPal has a larger participation. I don't think that the federal government here in the States looks at PayPal as the leader in payments. I think that they look at PayPal as a third-party option outside of the banks. And I don't think they take much influence from PayPal when it comes to passing legislation, if any at all. That said, I think that PayPal will grow. It will catch people by surprise. And I think that with all of the crypto services that they're offering, their stable coin, they're going to take up more and more market share. And maybe 5-10 years from now, probably even less than that, I think 3 to 6 years from now, people will sit back and look at PayPal and be like, holy crap, man, they just straight took over the market. The same way that we saw the dominance of Tether, right? It was back in 2016. There was no Tether. I mean, there was, but I think it launched in 2016. Either way, it was very insignificant from the time period that it launched all the way up till about 2020. It was minute.
2015, Tether launched.
It was 2015.
End of 2015. End of 2015.
Yeah. So during that whole time, it had very little market cap, very little significance, and then all of a sudden, boom! they were huge. I think they were third or fourth on the coin market cap at one. Oh, they're third right now. Never mind. Yeah, they're third on the coin market cap list right now, and so they kind of snuck in, right? People kind of doubted it. There was all this talk of Tether bomb and all this, and well, they got a pretty solid business model, right? And as long as they have enough cash on hand and they don't recklessly print money without having it backed, and they have funds available for withdrawal, as long as they just meet that very, very simple criteria, they're absolutely crushing it by taking people's deposits and rehypothecating it into short-term yield-bearing products that are, for the most part, liquid. You keep. Let's just around rough numbers here. You keep 50% or say 40% cash on hand for withdrawals, and then you take the other 60% of deposits and you lock it up in 90-day treasury bonds. And even worst case scenario, you could sell the treasury bonds. Like, sure, you might sell for a little bit of a loss, but you're gaining 3 to 6%. I don't know what the rates are on treasury bonds at this current moment, but historically, you can get 3 to 6% return, annualized return on a 90-day note. And so even if you sell it at a loss,
you're over 5%. You're over
5%
on 90 days.
I mean, it is still an annual rate. So even though it's 90 days, you're still, mathematically, you're not going to get the full 5%, but still you're crushing it. You literally get 5% in 90 days. No,
they'll pay you back to 5%.
APY. And
correct, but if it's
the same thing. Like if you have a bond for 5 years and 10 years, it's the
correct. But we're talking about shorter than 1 year, so you're looking at APR, annual percentage rate, which is 5%. So if you put in $100, you're getting back $105 from the government at the end of the 90 days. If it's less than a year. So that's how it works. But
it's
I'm
APY.
taking a look at 90 day.
It's an APY, brother.
Robin, trust me on this one. So 91-day T-bill treasury rate, you're looking at 5.29%. A year ago, it was 2.58%. Okay? 2.58%. We're looking at 5.3%. So ask yourself this question.
That rate is per year. Otherwise, there'd be 0 point in buying the 1 year and the 5 year. You would just keep buying 90 days for the.
Yeah, that's the point. Is when the yield curve inverts, because typically you're supposed to get rewarded more for holding them for a longer period of time. But that is why economists say it's bad when the yield curve inverts, because now people they're less likely to invest long-term in your government, and they're more likely to invest in short-term. And that is why the prices go up. But either way, whether it's a 4.5-year, 30-year, or a 5.3% 90-day T-bond, I mean, how could people take a look at the stock market? It's been averaging 6.5%, 7%, but there's inherent risk. And then you're looking at 5.29% on a 90-day T-bill or 4.5% on a 10-year note. That's a pretty easy decision to make, especially for people who are risk averse, especially for the traditional markets. That's typically what we see. I do want to move on, though. So there was big news from Coinbase today. So we know Coinbase, when they went public with their Coinbase cryptocurrency exchange, they had gotten a broker-dealer license, okay? And so they were trying to set themselves up to become a fully regulated, kind of like Robinhood, where you're able to offer stocks and more securities, and you're also able to offer cryptocurrency and digital assets. Well, they just won approval to list crypto futures in the United States cryptocurrency exchange Coinbase can now list crypto futures in the US nearly 2 years after applying for approval. Coinbase first applied to join the NFA in 2021. NFA refers to the National Futures Association. This approval makes Coinbase the first crypto-focused platform in the US to offer regulated and leveraged crypto futures alongside traditional spot trading. This is a quote from Andrew Sears, who's the CEO of Coinbase Financial Markets. He said, quote, offering U.S. investors access to secure and regulated crypto futures is key to unlocking growth and enabling broader participation in the crypto economy. Rob, is this big for Coinbase? The way I'm looking at it is it's another way for Coinbase to make money, to get revenue, to stay healthy. We know the revenue, majority of it, a vast majority, because they have their earnings call, comes from obviously trading fees, but also staking rewards, right? So when they stake on behalf of their clients, they're earning a piece of that reward. And so a lot of the money that they make comes from that. And if the US is trying to shut that down, and there's an avenue of your second largest way you make money is gone, is something like this a big deal? Or would it be a big deal regardless?
I think it's a pretty big deal. And would we see an expansion of services outside of traditional futures? Could you see leverage trading being offered? It's really not that dramatically different, right? I know that's one of the services Coinbase does not offer to U.S. residents, or I don't think they offer anywhere, but I know particularly here in the U.S., something they don't offer. But that is the bread and butter for a lot of exchanges. And futures crypto is not very different from leverage trading. So could we see that down the line? We know that they are offering staking services, so they want to expand their services. And so I think that this is them opening the door or to more utility use case, more functionality out of their exchange than simply spot buying and custodial services. I think that this is a lot more than that. So I'll leave it there.
I agree. I think there's a big, like I said, it's a big W for Coinbase. Would it entice more of these companies like Kraken, Gemini to go public, and potentially maybe that opens up avenues to more revenue for the company potentially? But I don't think you can sit here and say this is a negative. It's just another product that a company like Coinbase can offer to their people. And so, yeah. With that being said, guys, I do want to give one more shout out to channel sponsor Cam's Blue Wire Technology. If you run a business, you want to maximize your IT, networking, and cybersecurity, you want to find out how they can help you, visit bluewiretech.com or click the link in the description of this video. I do want to share our merch store, because Rocco, you had some cool stuff on here. So Rocco, let's go full screen on this laptop here, and then I'll kind of navigate. And so we do have a few things that I want to show you guys on here that Rocco just added. Where are we at? We're at Sin City Crypto.
I lost your camera there.
Give me one. Yeah. So we have Sin City Crypto here, some merch. So this one's pretty cool. Actually, I'm about to order this one here. But guys, go visit that. Also, do us a favor. Go follow us on Twitter. We're on Instagram. We're everywhere. If you want to learn how to support the channel, there's plenty of links to do that as well. Just check the description of this live show. Rob, you got anything else?
No, that'll be it, brother.
Okay. All right. Well, guys, apologies. I know I sound a little muffled. Hopefully I'll feel better being in studio. But thank you guys so much for tuning in. And with that being said, I can still finger tornadoes out of here from my house. Rocco. Guys, thank you so much again for tuning in. On behalf of all of us here at Sin City Crypto, we love you guys. Come back tomorrow, same time, same place. Until then, love you guys. Peace.
Feel better, Dave.
Gonna show you how to get that big dough. So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin, it's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major your grin. Laggers, we trade them in. Baddies, they came to sin, and sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon, then to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.